Welcome back, and I hope you enjoy your Christmas period because some of us are all the way away, and some is just enjoying these programs, and that's why this last show of the year is actually a show just to recap on the year and just to show how weird the markets were. And now I'm going to look at some indexes, and this is quite interesting. Well, can you remember there's an index like the overall index, the Johannesburg overall index, AC overall? Well, can you believe it? In March this year, 16th of March, we were at a level of 40,229. And then we saw, or we're still seeing, a mother of a recovery. And that's all thanks to the Federal Reserve. I mean, look at this chart. I mean, there it is. It's working on a long term, and then this blip. And then I had a question during the week, and somebody said, Frans, if that's the case that we saw this sell-off, was that a bear market? No, it was not a bear market. It dropped below 20% from the top. But the bear market usually lasts for 9 months, 12 months, 18 months. This was almost just a blip on the chart. So this is definitely not a bear market sell-off. This was just a correction in a long-term bull market. And everybody will now say to me, okay, Frans, but where are we going? Well, it's quite simple. If the stimulus carry on and the world is just carrying on to print money, there's the level. If it remains above 58,700, that means that the bulls are in complete control and that the market can easily go higher. Well, for me personally, it was a surprise that the market rallied so much. Because we know now of the stimulus, and for me the first warning signal will only be below this, and there you are. There's the level to maybe think about it, 56,247. That is 3,000 points away from where it's trading now. At the moment it looks okay, the momentum is strong, but this V reversal that we saw that turned into a fear of losing out market, this V reversal is classic. And I mean, it just shows you that the momentum is clearly in place. And to just give you an idea, there was an inverse head and shoulder. And if you look at this inverse head and shoulder and you project that line, there's nothing wrong to say that the market is close to its top. So let's see. We will see how it plays out. But the overall index had one beautiful year. Let's have a look at another star of the world, and that is the SP500. I mean, absolutely nothing can go wrong. This actually just shows you that the Americans came in, they supported this market with a lot of cash, and what happened? There's exactly the same chart all the way down, can you believe it, to 2,260. Some people thought, I thought that it can maybe go as low as 2,1, even 2,000. And then what happened? It just went all the way. When it turned around here, and now it's above 3,700, just shows you, and this is a weekly chart, of course, but it just shows you that the momentum is beautifully to the top. Everybody was looking for this almost as a reversal. That was the line there. And I'll show you why I'm saying that. Because that was a classic rising wedge. And what did the S&P do? It actually just went higher, and our first warning signal will be below 3,588. Above 3,588, momentum is up, but dear oh dear, if this breaks, it can easily do the following. Let's just do this as a conservative target. It can take it all the way back to 2,929. It just shows you S&P 500 is one of the star performers, mostly driven by the technology stocks, and that wants to take me to the NASDAQ. I mean, this is the one index that everybody, when everybody was sitting at home and watching TV and playing looking Netflix and all those things, just saying nothing can go wrong, and that's exactly what happened. Can you believe it? We had the sell-off of 6,736 in March, and we doubled. We're now at 12,635. There's just no stop to this index. And if you are crazy, you can say this. I mean, look at that chart. It tells you that it can actually go higher. And there you are, there's a classic falling wedge. And I would like to warn everybody, this is the index that's going to trigger a sell-off in the markets. Because this index had the one rally after the other, and it actually had no bad news. This little blip that we saw, this sell-off was overtaken within days, and it just went up all the way. So my warning level will be below that place there. Can show it for you there, that little top there. If that line breaks, this line will probably turn into a resistance, and that is sitting at 12,130. If 12,130 turns into a resistance, we can easily see that the NASDAQ, let's do that little sum of the projection, it can take it all the way down to 8,958. And remember, in this index, we've got the top companies of the world. We've got Amazon there, the Apple, the Microsoft of the world, the Teslas of the world. Can you believe it? Tesla owner, Mr. Elon Musk, born in South Africa, is the second richest guy in the world. His share price or his company is mostly priced at an incredible high PE. So let's see. And I forgot to say about the S&P. Remember, the S&P, by the way, trades at the price to earnings ratio of 30. That's a little bit topish. So let's have a look at the local index here of one of the winners that I think that can maybe be a winner in time to come, and that will be the bank index. And why do I say that? You know, when the market had this wonderful rally, what we've seen now, we tend to have a look and see which indexes has got some, you can almost say, ability to go even higher. Now let's have a look at this. It's a fell of a cliff. It's a massive consolidation for a long time. This is a weekly chart, of course. And where was the buying signal? Above that line. There you are. There was the high. It came back. A beautiful source of formation. And when it broke this 6,082 level, it got to this place where it's now north of 6,500. One thing to keep in mind, remember the banking index had to almost, you say, suspend their dividends. The Reserve Bank didn't want them to pay dividends because we didn't know what the debt issue will be, but we'll see. If the bank index goes below this, let's call it 6,100 level, then we can easily move below. And I'm still under the impression that the South African economy, although we're in not good shape, some of our banks locally got enough cash to weather the storm. Some of the international banks, I don't know, but I mean some of our banks are doing quite well. This is one index to watch, but just be careful. If it breaks below this, it can maybe surprise us all the way to the downside. Let's have a look at one of the winners here, and that is the resources index. Now, when the resources started in March, now can you believe it? It went from 30,000, let's call it 30,000, 29,200, let's make it 30,000. It rallied all the way, and in August this year, it almost touched 60,000. I mean, just look at this. If you look at this, and now everybody will always say, don't invest in cyclical companies. Yes, you can, and just keep in mind that these cycles can either go to the top, and then sell off for a while, then beautiful rally to the top, and then sell off again. You must just tack it at the right point and get in at the right point. I think at the moment, if we don't see a proper correction in the resources index, it's maybe just a little bit brave just to rally, to go in and buy it now. I mean, look at this beautiful rally. From there all the way to the top, we've seen a beautiful sell-off now. Now suddenly it's starting to pick up. What's interesting about this year's charts, and I want to show it to the viewers, look at the strange moves. Usually we had all these beautiful, and then we've got the sell-off, but look at this one, massive sell-off. I mean, this is a weekly chart. This is from 43,000 in 2 weeks to 29,000. I mean, that is I think a 14,000 point drop. That's scary. Now, look at this. There was a nice zigzag, but then suddenly you get this strong move to the upside. So just be careful. Somebody asked me, will we ever see a normalized market again? And I said to the person, always remember, markets are never normal. And it's only a case of sometimes The indicators can guide you, or the candles, or the bar chart, or any of those charts can assist you. But markets are never normal. Like also the world is in a strange place. We need to adapt, otherwise we will die. And the last index that I would like to look at is the platinum index. I mean, this is one of the winners of the market, and look at it. It is, and remember that platinum price, I said above $1,000, it looks okay. And what happened to the platinum index? It is almost on a brand new high, and that is positive. That tells me that the cycle of the platinum prices, the platinum counters are almost in favor. Just be careful. As we know, a cycle can carry on for a long time. It can also reverse. So that's the important thing. If you want to chase the momentum, and as you guys know, I'm not a momentum trader. If you want to chase it above 85. And our first warning signal will only be below this little line. And there you are. There's the line. And that will be at 69. Below 69, the chart will worry us. Otherwise, the momentum is beautiful. And this is another prime example of a classic V reversal. And now everybody is saying we don't want to lose out on this beautiful rally. We climb in, and look what Impala Platinum is doing well. Northern, all those charts looks absolutely beautiful. Just a tiny little note of caution. I've seen over the years, if all the charts looks beautiful and everybody believes that nothing can go wrong with the technicals, it can just go higher, that is the place that you need to be very, very careful. Well, enjoy it, enjoy your break, and thank you for watching the show, and visit our website www.fransdeklerk.com, and we will chat soon, and have a nice time at home.